Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to the Deep Dive. Today, we are really diving into the confluence of capital, culture, and computation.
We really are.
We've got a massive stack of sources showing how institutional money is, well, it's finally finding a home in crypto.
And how political shifts are legitimizing it faster than anyone expected.
Exactly. And maybe most importantly, how this high-stakes tech race is defining the future of AI and blockchain right in the Middle East.
Our mission today is pretty laser-focused. We want to distill all these different global signals into one, cohesive narrative for you.
So what are the big pillars?
We're going to analyze the true implications of that critical $423 million year-end influx into crypto ETFs. Then we'll unpack what happens when political figures endorse the asset class. And finally, bring it all home with that Dubai first perspective.
Okay, so let's start with the money. That's always the foundation.
Always.
We closed out the year with a really powerful signal. On December 31st, was it $423 million?
$423 million flowed into various cryptocurrency ETFs.
And a figure like that isn't just big.
Yeah.
Right? It confirms what we've been seeing. It's sustained demand.
It's sustained, and more importantly, it signals institutional conviction. This isn't speculative retail money chasing quick pumps.
No.
When institutions move that kind of capital at the close of the year, they're doing long-term strategic positioning.
They're setting up for the next decade.
Exactly. They see Bitcoin and digital assets as crucial tools for diversification, as a digital inflation hedge, and they're locking it in now.
And that institutional conviction, it's being mirrored by, well, a huge shift in the political landscape.
A seismic shift.
We're moving past the days of, just outright skepticism from Washington. You have Former President Donald Trump actively advocating for Bitcoin now.
And that provides a level of macro confidence and, frankly, mainstream legitimacy that is just hard to overstate.
It really is.
When a figure with that kind of political gravity embraces the asset class, it tells every corporate boardroom, every hesitant investor that this isn't a fringe movement anymore.
It's becoming a political talking point, which just accelerates everything.
It does.
And here's where it gets tangible. His own company, Trump Media and Technology Group, TMTG, is leveraging the blockchain.
Right. They plan to distribute digital tokens, these DJT tokens, to existing shareholders.
Which is a fascinating use case.
It is. They're distributing one token for every full share held. And crucially, they're doing this on Crypto.com's Kronos blockchain.
Okay, I have to push back on that for a second. Why Kronos? That feels like an odd choice for a major U.S. corporate drop.
That's a sharp question.
You'd think they default to Ethereum or a layer 2, something more U.S.-centric. What does that choice tell us?
It's likely a partnership of convenience, driven by speed and the existing user base of Crypto.com. But you're right, it also signals that TMTG sees its audience as global.
So let's talk utility. Are these tokens just digital air, or do they actually do something?
Oh, they have utility, but the distinction here is vital. Our sources detail that these tokens can offer rewards, loyalty points, discounts on their platforms, Truth Social, Truth Plus.
But, and this is the big but.
This is the critical clarification you have to internalize. The tokens do not represent equity or ownership. They are not shares, and they may not be redeemable for cash.
So if I'm hearing you correctly, this is a sophisticated digital coupon.
Essentially, yeah.
A loyalty reward system, but instead of living in a corporate database, it's on the blockchain for immutable distribution.
Precisely. It sets a huge precedent. It's corporate America using crypto rails to reward engagement without touching the tricky world of regulated securities.
And while TMTG is exploring tokens, Bitwise is just going full throttle on access. They're launching, 11 single-asset crypto ETFs?
11. And this isn't just more Bitcoin exposure. This is institutional validation of the multi-chain future.
They're taking a whole basket of altcoins.
A huge, diverse basket. We're talking AV, Uni, Zcash, Sui, Nirin, and bringing them under that regulated ETF structure.
I was genuinely surprised to see assets like AV and Zcash on that list.
Right.
They aren't the standard institutional picks.
Yeah.
What does that tell you about Bitwise's risk appetite?
It tells us they believe these aren't just niche tokens anymore. They're betting they are long-term foundational assets for DeFi and privacy. They're forcing traditional investors to finally grapple with the altcoin thesis.
So that accessibility is great for bringing capital in. But you mentioned a warning for the listener.
Yes. The structure of these ETFs, it's a mix of direct holdings, derivatives, sometimes non-US products.
Well, complicated.
It's complicated, and the warning is simple. Because of frictional costs, management fees, all of that, the performance may not perfectly match the spot price of the crypto itself.
You get regulatory comfort, but you have to be aware of the performance drag that comes with it.
Exactly.
That corporate political link is powerful, but sometimes the real adoption signals come from culture.
Absolutely. If institutional money is the suit, sports is the t-shirt.
That's a great way to put it. And we saw a massive sign of that, especially in the ENA region.
We did. 2bit, a global crypto exchange, has partnered with Spain's La Liga,
The top football league.
as their official regional partner in the Middle East and North Africa. This is designed to onboard millions.
So they're combining the excitement of football with the actual use of a crypto platform.
And it follows all this enthusiasm from events like the World Sports Summit in Dubai. You had Ronaldo, Habib there. It feels like every major athlete is either buying a club or launching a crypto fund now.
And they're backing it up with real incentives.
They are. Fans and traders can win VIP trips to Spain, signed jerseys, match day experiences. They are linking exclusive, real-world perks directly to crypto participation.
It's a smart on-ramp for a passionate audience.
A very smart on-ramp.
Okay, moving from the pitch to the platform, we have to talk about AI merging with finance. KuCoin Exchange just launched KIA,
The KuCoin Intelligent Assistant.
tailored specifically for crypto users.
And it's an incredibly powerful tool. It's designed to flatten that steep crypto learning curve. It helps users understand market movements. It answers questions, shows charts. It's like an analytical guide for beginners.
But this raises a huge question, and I don't think there's a simple answer. Can AI entirely replace human judgment in crypto?
That is the core philosophical and financial challenge of the next decade, isn't it?
Right. Would you advise anyone to trust an AI completely with their portfolio, in a market that's so driven by risk and sentiment?
Look, while AI is unparalleled at analyzing data, it lacks crucial human elements. It can't navigate subjective risk tolerance.
What's a tolerable risk for me is catastrophic for you.
Exactly. And more importantly, AI struggles with what we call novel, risk unforeseen political events, black swan regulatory moves.
So the machine can tell you what happened with near-perfect precision.
Yeah.
But you need the human to decide why the market is reacting emotionally and what to do next.
Precisely. AI is an assistant, an analyst. But human judgment is the necessary layer of navigation and oversight.
Now let's talk about the global macro competition that's going to dictate where all that AI power gets built and governed.
The Dubai first perspective.
The UAE recognizes that infrastructure is meaningless without trust.
They're aggressively prioritizing AI governance. We just saw a landmark achievement from Dubai's GDRFA, that's the General Directorate of Residency and Foreigners Affairs.
The GDRFA?
They secured the ISO 42001 AI governance certification.
Why is it so significant that a residency and foreign affairs body is the one leading this push?
That's the whole story right there. It's the first of its kind in the UAE, and it sets a global standard for ethical AI use by a government entity.
So they're framing AI governance not just for tech firms, but for citizenship, public services.
Exactly. For citizenship, for border policy. Their framework is built explicitly on a people-first approach, respecting global data protection and privacy.
So this enhances public trust, but it's also a competitive move.
It is. Oxford Insights recently reported that Saudi Arabia was leading the MENA region in AI adoption readiness.
So Dubai's certification is a strategic countermove to secure the ethical high ground.
It's a deliberate differentiation strategy. While Dubai focuses on governance, Saudi Arabia is focused on securing the physical computational infrastructure, the raw power.
Which brings us to the monumental news about the Saudi PIF-backed project, Humane.
The scale here is it's staggering. Humane, Saudi Arabia's new AI firm, secured the first shipment of NVIDIA's latest Blackwell AI chips.
The highest performance chips available.
We're talking about 18,000 chips in that first batch alone. This is securing the physical engine of the future digital economy right now.
And they have a hard timeline for this.
They do. Data centers to house these chips are planned to go live as early as Q2 2026 in Riyadh and Dammam,
with initial capacities up to 100 megawatts each.
Securing those Blackwell chips is everything. That infrastructure will drive the entire region's digital economy for the next generation. It's a clear statement of intent.
It's an incredible juxtaposition. Saudi Arabia secures the hardware, Dubai sets the ethical standard. We're watching a high-stakes tech race unfold in real time.
We are.
Okay, let's quickly pivot to a market snapshot. Global crypto market cap is sitting around $3.06 trillion. Trading volume is about $86.76 billion.
The decentralized metrics, though, are telling a slightly messier story. DX volume is low, about $10 billion.
But look at the efficiency.
Right. Total fees paid were only $63.53 million. Centralized platforms would likely be charging, $200 million for that same activity? That efficiency is the real story of DeFi.
I'm still concerned about that DX dominance figure, though. It's at 33.79%.
Still low.
It's too low. We watch that so closely because decentralization is the whole point. If it stays this low, it means 2/3 of the market is still trusting centralized gatekeepers. We need that closer to 40, maybe 60%.
And that ties into macro concerns. We've seen the total value lock the TVL on a downtrend. Our sources link this directly to macro volatility and specific political actions in the U.S. creating uncertainty.
Let's talk about an interesting exchange anomaly. Uniswap is leading, but PancakeSwap, it fell dramatically.
From number 1, just 2 weeks ago, down to number 5.
What happened there?
That sharp hit is directly attributable to the Trust Wallet glitch.
Which is managed by Binance.
Right. And Trust Wallet is the main gateway for so many people into the BNB ecosystem where PancakeSwap is dominant. So when the front door is compromised and $6 million is lost, even with reimbursement plans, people stop walking in, confidence was hit hard.
Shifting back to dominance, we have this bizarre consistency for almost 6 weeks. Bitcoin at 57.200% and Ethereum at 11.70%. Just rock steady.
That sustained equilibrium is highly unusual. It really suggests a strong market consolidation phase, probably driven by that institutional confidence we talked about. Long-term holders aren't trading.
Okay, finally, let's look at the proof-of-stake leaders.
Ethereum still leads at $350 billion. Then you have Binance BNB at around $120 billion and Solana at $70 billion.
Before we wrap up, for the average person who still hears Bitcoin and gets confused, how would you just simply define it? No jargon?
Think of Bitcoin as digital cash. It's money that lives only on the internet. And the key thing is, it isn't controlled by any single country or bank. People can send value directly to each other globally, instantly. All the transactions are recorded in a public digital ledger that everyone can see. That's what makes it secure.
That's incredibly helpful context. So the takeaways are clear. Institutional adoption is validated. Mainstream integration is accelerating through politics and culture.
And the AI and crypto convergence is reshaping finance and national governance, especially across the Middle East.
But as we rely more on these advanced tools, we have to recognize the threats.
The threats are real. The potential for AI-powered market manipulation, sophisticated cyber attacks. We can't ignore that necessary friction.
A definite risk to monitor. But here's the final provocative thought for you to mull over. We've seen Saudi Arabia secure the physical, cutting-edge AI hardware, while Dubai sets the global ethical governance standard.
The raw power versus the framework of trust.
How will this high-stakes regional tech race between computational dominance and ethical trust influence? Which city becomes the primary hub for global digital asset investment and innovation over the coming year?
Think about whether the hardware or the governance framework will ultimately attract the most capital. The race is on.
Thank you for joining us for this deep dive into the global markets. We'll see you next time.